Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Jackie Ryan, and she is the founder of Your Independent Financial Solutions. Welcome, Jackie.
Thank you so much for having me, Gary.
So, Jackie, tell us about your background.
I am a tax and business strategist. I call myself a serial entrepreneur. I have multiple businesses. I do tax preparation and business consulting. I also am an enrolled agent. So if someone has an issue where they need to be represented by the IRS or with the IRS because they have tax debt or we're trying to resolve that tax debt, payroll tax debt, any of that, I can help them resolve those issues. I'm a published author, grant writer, filmmaker, and the list goes on.
Right.
But those are all things that I incorporate into my business when I'm advising clients because, with that amount of businesses, I've also encountered a lot of mistakes. I've made a lot of mistakes along the way that I use to help people not make the same mistakes.
Right. So tell us, what are some of those common mistakes that you've seen people make?
I think one of the biggest mistakes that people make is taking advice from people. Let me just say the internet. Taking advice from the internet.
Sure.
Somebody says, get a C corporation, get an LLC. Well, that may not be the right entity for you and for the business type that you have. So an example would be someone who's buying real estate. You don't want to have a real estate company where you're buying and holding real estate in an S corporation. That may not be the best vehicle for you. You may be a person who your profit margin is less than 40,000 and you're doing, someone said, start a C corporation where your tax rate is going to be higher in a C corporation than it would be as a pass-through entity where your personal tax rate may only be 15%. So making sure that they sit with someone and get the advice on which entity type is best for them when they're starting their business, I think is like the biggest mistake that I've seen people make and I've tried to fix over the years, because most people will either go a C corporation or an LLC because it was something they heard, and it just ends up tax-wise biting them in the butt when they go to file those taxes, either the first or second year. And then another mistake that I think people make is not keeping track of their finances. They say, well, I didn't make a lot of money. I spent a lot, but I didn't make a lot. Okay, well, how do we know you spent a lot of money? How do you know you spent a lot of money? What if, which happens a lot, you spent more than what you think? And people do. When you're first starting out in business and you're the one funding your business, you're putting all of this money in, you're using your personal credit, you probably spent a whole lot more than what you think you did in your business. So being able to track that, I hate to say QuickBooks, but QuickBooks actually has low-cost software for those small business owners who are just starting out and not having a lot of expenses. But then I also say with QuickBooks or any accounting software, make sure you get one that is right for your business, because if you're not able to put all of your expenses in there because they're not categorizing them in that way because of the plan you chose, that wouldn't benefit you in the end either, because you're still not able to track all of your expenses. So don't think you can't afford something. It's so much more costly at the end of the year when you go to file your taxes to have paid someone to keep track of these things and have gotten that advice than it is at the end of the year to find out, oh my God, I'm in a crazy tax situation. For example, I've had people come to me, they start C corporations, they spent $15,000, $20,000, $50,000 in these C corporations, and then because they also have a day job, they want to be able to write that off on their personal return. Can't do it. It's a C corporation. A C corporation is a completely separate entity from the person. It is not passed through, so those profits and losses do not flow down to the person. So what I basically tell them is basically, you kind of let that money just slide aside and you
Right.
lost that potential that pass-through money that you could have obtained had you had your business set up in a different way. So sometimes we're able to reclassify the business for that person and then be able to help them save, some of that money that they may not have been able to save. Sometimes it's too late because, they waited so many years before they came to see us. But either way, just making sure that you speak with someone who can give you the proper advice and not just thinking that business is a one size fits all, because it's not.
Now, when you're saying to talk to somebody to give you advice, obviously, we've run into many people that say, "Oh, my next door neighbor said." Can you talk a little bit about, I'm going to say the difference between, hey, your next door neighbor or that person that may be doing taxes on the side, or one of the, I'm going to call them block stores that do taxes, versus somebody who's an enrolled agent versus, so there's a lot of different, I'm going to say, people out there that say that they help. Can you kind of talk a little bit about some of the differences and the, I'm going to say, the different levels of expertise that you're going to get?
Gary, that is a great question and so true, because we go to our tax preparers, our CPAs, who may not specialize in business.
Mm-hmm.
And if they don't specialize in business, then the advice they give you is going to be more from an accounting perspective or a tax perspective, whatever their expertise is in. You would want to speak. So, for example, with me, I'm a tax and business strategist. When I give advice to people on starting a business or anything with their business, it's always from a tax perspective. I'm not an attorney, so I can't tell you legally which ways or which entity types you should do, because then I would be in the area of practicing law. And a lot of people will tell you, you don't want to get in trouble with doing that. So when I'm giving this advice, it's always from a tax perspective and how is it going to affect you tax-wise. So when you're speaking with someone, you want to make sure that you're talking to someone who has experience in the area that you're looking for. For example, if you're looking for advice on business startup, if you're looking for advice on accounting, if you're looking for advice on resolution, whichever area you're looking for advice in, you want to make sure that the person has that experience. Because as you said, if I go to my next door neighbor may not have that tax or business experience. If I go to one of the big box brands, which I worked there for 7 years, so I understand how that works. You go in there and who knows what you may get there. We think that we can trust them because they're on every corner. And I'm not saying you can't. I'm just saying we don't know which tax representative we'll get, because they have a plethora of people, from just getting out of school to having 30 years of service to enrolled agents. So you don't know, even when you go in or you call, what type of advice you're going to get, because we fix lots of returns from big box brands or different accountants. And it's always because of their strategy and which way they look at it. Gary, I was a CFO at a multi-million-dollar corporation here in Orlando. And we had the CFO and we had the CPA. The CPA and the CFO did not see things eye to eye, because the CPA always looked at things from an accounting perspective. Myself as the CFO, I'm looking at things from a perspective of, number one, risk management. I'm looking at how can we make sure we keep things liquid, making sure that we keep enough of our assets and not paying a lot in taxes.
Right.
I am a huge believer in not paying a lot in taxes. So even if we can't do it this year, what can we put in place to put you in a position to not have to pay? And I'm not talking about tax evasion. I'm saying legally putting things in place that you do not have to pay a lot in taxes. I don't want to pay a lot in taxes. I don't want you to pay a lot in taxes, but I always tell people I'm not built for jail either. So whatever I do, trust me, it will be legally it will be with integrity. And I think that's one of the things that myself and my clients appreciate about me is that if I feel that you're trying to do something unethical, we can't work together. You know what I mean? But I will push that envelope to as far as I can legally to make sure that you don't have to pay as much in taxes as you may have paid in the past. And I have people ask me all the time, well, why didn't somebody else know this? Why didn't my last CPA know that? I don't know. Some people see taxation as black and white. Some people see the areas of gray. Even when you call the IRS, you can call one person and they will tell you that no, you didn't qualify for the earned income tax credit or such credit. And then you call and you talk to another person and they give you another answer and another person give you another answer because it's subject to interpretation. So it's all about giving me enough information that I can paint the right picture with the IRS that we can substantiate everything we put on that tax return.
Right. Going back to the, you made the statement of why didn't my other CPA or why didn't my other tax preparer, give me this information or tell me this. We run into that quite a bit, and I think that it doesn't make any difference what profession it is. You're gonna kind of hear that. Lots of times we're hearing in the media now about, hey, why is it that all the mega rich people are the ones that are getting all these tax breaks and using these strategies? Have you found that a lot of these strategies are still available for those that aren't in the highest income tax brackets, but people just don't talk about them?
That's a great question. One of the things that I did when I was the CFO of this multi-million-dollar corporation was we brought in a captive insurance.
Mhm.
A lot of accountants don't like the captive. They don't fully understand it, and that's why. But that wouldn't be a good vehicle for someone who's not making millions in
Right.
net profit.
Right.
So there are different things that are available to people who make more money than there would be to those who don't. However, there are still lots of things that people can do and implement. It's just about kind of making sure you understand the tax code. For example, say you have a business that you run from home and your teenage child does a lot of your social media. Like they do your recording, they manage your social media account, put them on payroll. A
Mhm.
lot of people don't, and I don't mean just in words. I don't mean in theory. I mean really put them on payroll. You have to have that money going into a bank account. You have to have withholding for them. Making sure that you're paying them, truly paying them, is another avenue that a lot of people overlook, or they try to say, well, I'll say I paid them, but I didn't know. Truly pay them. And then that's another expense that you have that you can use as a write-off to help minimize some of those taxes. You'll see countries all around the world, companies all around the world who pay their children. They have their
Right.
children on payroll. Another thing that a lot of people don't think about, that I use with a lot of my companies that have product is, did you give away anything? Did you have any product samples? Like a lot of things people do in their business, they don't necessarily think about as an expense. And that's why I say you have those little ancillary things that people don't always track. But if you think about every single thing you do in your business, and that's what I do, I ask the questions. What do you do? How do you do it? Did you do X, Y, or Z? Because a lot of times you'll have an idea. I have an idea of what people do in that industry. So I'm pulling those questions out of people. Typically, my tax returns aren't always done in 30 minutes to an hour because I am going to sit with that return and sit and sit and sit until I can get it to where you're getting a refund or minimize that tax liability as much as I possibly can, because I don't want you to have to pay taxes. And if in the end I wasn't able to do that, then we're going to try to put some things in place to be able to make sure that happens. So again, we have the people with the product-based business, making sure you track whether or not you gave out any samples, whether or not you gave out any gifts, and then being able to track that. Your accountant knows the specifics on how much you can deduct on all of that. but just being able to track it and hand them those numbers and those amounts so that they can be able to use those things to write off. If you're a service-based business, you're probably spending a lot of money in apps and software. Track those things. Do you know how many times I forget that I have that $2.99 coming out for Apple? I have another for $1.99 coming out for Apple. There are so many different things because they're so minute. We forget that we're even paying those monthly. And if you don't have an accounting software to help you track those things, you definitely aren't thinking about those. But just those little things that people overlook are the things that I'm asking questions about and pulling out of my clients so that I can make sure that we're writing off every single thing legally possible. Another thing that people don't think about, I'm giving you all of my pearls here, Gary.
There you go.
Another thing that people don't think about is creating an accountable plan. When you create this accountable plan for your corporation, what you're saying is we're going to reimburse our employees for X, Y, or Z. That employee is using their home for the business. If you're using your home for your business, you can't do where you can just create a lease anymore. It has to be an accountable plan. And we will reimburse that employee X amount every month for utilities or whatever you put in this accountable plan. And now that's another expense. So we're reimbursing that employee $500, $600, $700 per month for the use of their home, but spell it out in that accountable plan. That's huge.
Right. Especially now since your employees can't write off, office use of the home, that this is a way to make them whole.
Right.
Which is important. I think, one of the things that, when you were talking about the businesses and, the different apps and different things like that they may be using, I think that kind of goes into okay, do I have a business or is this a hobby? Can you talk about that a little bit? Because I think that there's a lot of gray area there and people think that, that I have this, I'm doing this, so it's a business. Can you talk about that a little bit?
Well, according to the IRS definition, a business is with the intent to earn a profit.
Mm-hmm.
So if you intend to earn a profit from those activities, then you are in business. A hobby would be my aunts and uncles. They were getting around and they were making quilts and they're just sewing, and we decide, hey, I want to buy one. They'll sell it to you if you want it, but it's just a hobby. It's not something we're doing to make a profit. We're just doing it for fun. So I think that would be the biggest thing to look at is intent. Is the intent of the activity to earn a profit, or is it just something that you're doing for fun? So if it is that you're doing it because you want to earn a profit, then you need to make sure that you set it up as a business and operate it as a business.
What are some of the things that they can do that are, I'm going to say, stupid, simple stuff that people can do for that?
One of the biggest things I would say, because even if you have a sole proprietor with the IRS, a sole proprietor does not necessarily have to have an EIN. Mm-hmm. So say you've been doing this business for 3 years, you write it off as a Schedule C on your tax return. I think that's the biggest thing, just writing it off on the tax return. That shows your intent. Making sure you have a business bank account. I think that is another one of the biggest mistakes that small business owners make. They fail to separate personal and business. What I always tell people is you want to do that because you do not want to have the potential of piercing the corporate veil, as they call it. What that means is if you have your personal and your business money in the same bank account, you're saying we are one. I am my business. Therefore, if your business has some sort of liability, debt, any of that, it falls on you personally. Making sure that you separate that and having a business bank account. So then you're saying this business is its own person, its own entity. I am completely separate from it. That's another reason why you get the EIN, which I call the business's social security number, because you're also securing and separating that entity from yourself as an individual. That is huge. Making sure to have that business bank account so that you do not commingle, mix anything, and you can say that you're separate from that business and it's not a hobby and not just something that you're doing to have fun.
Right. You talked about some of the tax deductions that people miss because I'm going to say not keeping proper records. What are some of the other tax deductions that you're seeing people, small business owners miss as they're going through their day-to-day lives?
I think another big one for those who are pass-through entities would be mileage. Now, there are a lot of people who, work remote and do everything completely online. But the way I look at it is if you use your vehicle at all, you have to go to the store and purchase paper. You have to go meet clients. Any business activity you do at all, because that opens you up to being able to, well, depending on how much you use the vehicle, you add depreciation, you add all kind of stuff with just using that vehicle. So that's another question I ask. Do you ever use your vehicle? It has to be at least 50%, to be able to do the depreciation or to make it count. But still, that's mileage as well as depreciation. And if your mileage isn't that much, then you have gas, tires, oil changes that you may be able to use in place of the miles. But an app that I always recommend to people is Mile IQ to track those miles, because when you're using that, depending on which version you use, you can add in your receipt for your gas. You can add in different things. It asks you, is this a personal or business trip? So it kind of does a lot of the heavy work for you, but just having that and being able to hand that to your tax professional at the end of the year to say, hey, I had this amount of miles. This is the vehicle I use. This is when I bought it. So now I'm going to depreciate a little bit on that. How much did you use it in business? Was it completely for business? Are some of the questions that we would ask. But I think that's another one of the biggest things that people overlook when they're thinking about their business expenses.
Right. I've seen, a lot of change going on in the tax landscape. And I think we're going to see a lot more, here in the next year. They said that there's, what is it, 79,000 new auditors are going to be hired under the IRS. What do you see the landscape of, tax enforcement going to be?
Well, I think we go back to COVID, and COVID changed the landscape for all of us in so many ways. One thing it did was it opened businesses up to free money. It opened people up to say, I wasn't a hobby all this time that I said I was a hobby. I was really a business. I was just hiding money through Cash App and all of these different apps that now the government is regulating because they found out how people were basically hiding their money and evading taxes.
Right.
So you have those different things that are changing. And then we have where, like I said, a new regime is coming in. So with every new regime, we have new tax laws, but then we also have tax changes that are expiring. So there is like the Tax Cuts and Job Act, where we had the qualified business income expense deductions that are supposed to be expiring in 2025, which is affecting like that additional amount that pass-through entities were able to deduct on their personal tax returns. So we have the possibility of the tax rates increasing because that Tax Cuts and Job Act is expiring. So where we had the three rates, 10, 12, and 15, we could possibly be going back, and the rates going back to what they were before. So it's just so many different things that could be changing, in addition to what a new president would possibly be implementing based on their own agenda. So we just don't know exactly how much is going to change, but we know there are definitely going to be changes. There's always changes. And usually probably about December, first part of January, we usually find out a lot about what the new changes would be. And those are usually they're going to be from the current president, because, January we'll have somebody different in office. We just don't know who that may be, and then what their full agenda will be until they get in and, implement a lot of what they have planned.
Right, right. We covered a lot of stuff here quickly, Jackie. I think you definitely have given some good nuggets for people to pick up on. What have I not asked you wish I had?
There, you asked great questions. I can't think of anything you asked. Um, I can't think of anything you asked. I just want to make sure that entrepreneurs, when you think about your business, you think about how you want to end. A lot of times when I do my consultations, that's one of the things I ask. Where do you want to be in your business?
Right.
If you're planning on getting funding, if you're planning on getting business financing, let's look at making sure that you're profitable.
Mm-hmm.
You're not going to get any loans if you're showing a lot of losses. You know what I mean? Is that are you looking for a legacy? Then let's make sure that we have systems, processes, procedures in place. Let's look at how we can add new product lines or new service areas that you may be able to implement to increase that. Let's look at making sure that you stay tax compliant so you don't end up losing your business, because a lot of businesses end up losing and going bankrupt or going out of business because they ended up not properly paying their payroll taxes. So there are so many things to be mindful of when you're in business, and just making sure that you're doing things properly. So I always say, if you start strong, you'll finish strong, but just know where you want to go.
Right, right. So Jackie, if people like what they hear and they want to reach out to you, how can they reach out to you?
We have our website, itsyifs.com. You can reach us on Instagram or Facebook, No Ifs For You, and that's NOIFS, the number 4, the letter U, on Instagram and Facebook. You can reach us by phone at 407-512-5854 and email admin@itsyifs.com.
Great. Jackie, I really appreciate your time today.
Thank you, Gary. Thank you for having me.
Thank you. This week, my guest was Jackie Ryan, and she's the founder of Your Independent Financial Solutions. I'll see you guys next week.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.